Hi everyone! In this video we'll go through 4 different options of growing your wealth. We go through advantages and disadvantages of each option so you have a better idea of how to approach your financial management in the future. Let's start. The 4 options we will look through are the wealth management department of a bank, or a private wealth management firm, a standalone financial advisor, investing with a robo-advisor through an investing app or a robo-advisor of a bigger bank offering, and investing by yourself. Whatever option you will choose, it will always be made taking into consideration these criteria. You have to see how much control you get, what is the product cost, which returns can you expect, how much time it will cost you, and these decisions will be also made in considering how much knowledge you have and how much self-belief you have. So with each option, I will talk about this criteria and we'll see how it works. So let's look at the wealth management and a bank. Wealth management departments in pretty much every bank today are offering investing services. If you want a personalized approach, then normally you would have to bring them at least 100,000, and with this amount you're still a very insignificant client. You have to understand that they are interested to make money, so let's see, 100,000, 1% per year, that's 1,000 euro a year. So you have to understand, for a big bank that's not so much money, so it's not really interesting for them. But today lots of private banking options are being offered for people with a wealth above 100,000. What will you get? Well, you will get a semi-personalized approach, though you will be offered a very standard portfolio. You will be paying high fees, which will be destroying your profits. You will get low returns as a result. You will have no control of where your money is being invested, and to be honest, you will have no idea what you will end up paying, because not only you will be charged for the management services, not only will you be having rather expensive products, you will also have lots of hidden fees, and there are lots of transactions will be made which you don't understand, which you will end up paying for. If you start reading about it, even professionals, even financial professionals, start talking out loud, because they cannot understand how much costs are being passed to the final user. So this is something which won't cost you much time. You don't really have to lots of self-belief to do it. You don't need so much knowledge, because you will just go there, will tell them that this is the money you give, and you will fill in standard questionnaires, but it will not really bring you good results. But it will give you kind of a feeling of a peace of mind, because you went to a serious organization and you brought your money there. Financial advisor. So these usually are self-employed people. So you will have a relationship with one person, and this person will persuade you that they are a good option to manage your wealth. To begin with, I would say it requires time and dedication to select the professional. And it's not an easy process because you would have to go through a selection process like selecting an employee. You really would have to see that this is actually an employee you are selecting. You're selecting very important somebody who will manage your money. And it will be an intimidating process because these people are good salesmen or saleswomen normally. It will become personal rather quickly, no? Because you will be talking about money, so you will be giving them lots of personal information. And it won't be easy for you to go through the interviewing process, though you would have actually to go through an interviewing process, going talking to different financial advisors and asking them very important questions. You would have to ask them why do they think that they are good at it. Uh, you would have to understand how they earn money, because lots of financial advisors are actually earning money selling you certain products. Some of them, or many of them, don't have any freedom to offer you all the products in the world, but they are actually bound with a relationship to a financial institution which gives them certain products. Majority of them are not exactly high-level financial professionals. These are people who follow the course and filled in the exam, but they are not necessarily somebody with a very experienced in finance or actually able to invest money. So you have to understand who you're working with and why they will be good in doing this job. And this in the beginning would require your time and actually self-belief. The fees will not always be easy to understand. You will never know exactly what returns you will get. No? And we all know that nobody actually can guarantee us any returns. And here it's actually probably even more complicated. You probably will have little control, and it is another relationship you would have to manage. No? So I don't think you can just forget about it. You would have to manage this relationship. You would have to have trust in this person. But the more you know, actually, the more questions you ask, the better you will understand what they are doing, and you would have to be doing it to get good results. And you have to be careful because this is a one-person business, and people have different priorities. People get sick, people get bored, tired, retire. So you have to understand how long-term this relationship would be, because you are choosing somebody for very long time. And if you would choose somebody too young, then this person probably wouldn't be very experienced, but at least you can expect this person to stay with you for longer. If you would find somebody very experienced, that person might be willing to retire soon, and then the question is what will happen to your wealth once this person retires. So you have to keep that in mind as well. Robo-advisors or investing apps. There is lots of choice today, and it's rather difficult to choose. It requires a research, and you would have to use your capacities to assess this financial institution. So sometimes I receive a question like, can I invest with an app? Well, no, you cannot invest with an app. An app is something which was created by a financial institution, and you have to understand what is this financial institution is. So today there are lots of apps created by startups, companies which exist for 1-2 years. If I can give my advice, I would never give my money to a startup with, even if they have a very sophisticated app. No, so you are not sending your money to an app. You are sending your money to somebody who will manage your money, and you have to understand it. So any robo-advisor or investing app you would choose, you have to understand the history behind the founders. It has to be something solid. I would never start putting my wealth into something which exists a couple of years. As much as I like technology, I would not allow technology fully to manage my wealth. No, so I don't really trust robots to buy my investments and to sell my investments based on some algorithm I understand. So you really have to understand what are you doing. But there are also good products out there. There are apps offering you very simple portfolios with index funds or ETFs, and that's a good way to have it all automatically done, low maintenance, low fees. So there are also good options out there if you search for them. So be careful for what you are choosing, but there are also good options there. You will pay a little bit more fees than what if you would be doing it yourself, but sometimes it's worth it because it takes out all the work. You will not have control, but sometimes it's also not such a bad thing. And there are a few unknowns, but so I think it requires certain knowledge and self-belief to choose the right one. You will pay a little bit extra product cost, but you will save yourself lots of time, and maybe you will save yourself also lots of emotional movements because you are not really managing money yourself. So and the returns could be attractive. Once again, I would like to specify that I would only use robo-advisors and investing apps for passive portfolios. So I will never advise to do anything on an active trading side through an app. No? So that has to be clear. So I wouldn't purchase actively managed actively managed portfolios. I would only buy passively managed portfolios by a robo-advisor. And finally, what if you're doing it yourself? Well, we talk a lot about it, so it will require time and dedication. Though we already know that if we are doing a passive investing strategy, it shouldn't actually cost you so much time. At this moment, all my passive investing per month doesn't require me more than half an hour. But it requires discipline. So that's important. Discipline is important, but also I think when you are managing something like this and you are disciplined enough to do it, it brings you lots of self-belief and confidence in yourself. So this is a bonus of doing it yourself. It can be emotional, no? Especially if we're going through the times of financial crisis. And it can feel lonely. No, it can feel lonely because, well, you are doing it by yourself, and also because there will always be people who telling you that you are not doing it correctly and that there are other ways to make much more money. Well, but for that, you also have a Women Investors Club where you can talk to similar-minded women. This will be low cost and low maintenance in the long term, and it will result in high returns. So that we know if we are just following passive investing strategy, if we have low cost products, it brings us good results long term. We have full control and we have full flexibility. So for people who like control, this is a good option. Patience will bring us attractive returns, but it requires patience. So here we need knowledge, self-belief, it will result in returns, and we have control. So the decision is yours. I hope you like my explanation. Let's continue learning.